Pack is in focus. ACC came out with its numbers. Brokerages were extremely upbeat. Demand recovery, pricing resilience, cost control, all of which came to the fore. Now, when it comes to Ultratech Cement, very similar theme being played out. Very strong results from Ultratech Cement. It's been a beat across most of the parameters. It's been a beat across the parameters that were expected as far as analysts on the street were concerned. Volume growth has been extremely encouraging. Company commentary too has been very strong. What the company is saying is that they're actually saying that they've been quite enthused by the kind of demand recovery that they've seen in the rural as well as the retail space. In fact, some amount of green shoots is being seen, given the fact that number one, you're actually talking about a post-pandemic or a post-lockdown demand offtake being quite strong, and also strong demand or offtake being seen after the fact that you're actually seeing the seasonally weak monsoon quarter just go by. Green shoots too have been seen in terms of new government infrastructure projects. Brokerages, as expected, are extremely enthusiastic, and most of them have retained their buy stance. They've upped their target prices, upped their EPS estimates, and they believe that the cement universe, especially Ultratech, given its pan-India presence, can be a big beneficiary. What JP Morgan is saying is that they've maintained their overweight. They've kept their target price at 5,400 rupees a share. They're saying that Q2 has been a beat on all of the accounts, and they believe that the scale as well as solid execution of the company management is something that is coming to the fore. They're saying that the balance sheet deleveraging, again, remember the high debt given the fact that the company had taken over Century assets, but the company has managed to turn over Century assets quite nicely as well. According to them, the risk reward at 12 times EV to Ebitda is something that they believe is quite favorable as far as Ultratech Cement is concerned. So the balance sheet deleveraging is something that JP Morgan believes is auguring quite well. As far as CLSA is concerned, they've maintained a buy stance. They've increased the target price to 5,600 rupees a share. What they're saying is that a strong performance on all of the parameters is something that has driven a 30% beat as far as the operational Ebitda is concerned. The Ebitda per ton is something, according to them, is extremely encouraging and extremely satisfying. Also, what they're saying is that robust volume growth as well as lower cost is something that has driven the beat as far as analyst estimates as well as their own estimates were concerned. They're saying that demand outlook is something that is improving, but they're cautioning that cost pressures is something that could weigh in on the profitability. They're saying that deleveraging of the management as well as the balance sheet is something that is on track, and they believe that that is something that is most likely going to drive the PAT growth. What they are saying, and this is something that is extremely interesting, they are saying that Ultratech Cement is well placed for a complete re-rating. So they're actually believing that target multiples could see a re-rating and an uptick as far as the ensuing cement upcycle is concerned. Remember, most of the brokerages have been bullish, as this particular season is very strong for cement offtake.